President Trump is going to unleash a revolution in America, and this will make smart Americans rich. But only if they know which stocks to invest in. James Altucher claims to know the top 3 stocks to invest in for this, but there's bad news. He won't reveal them unless you buy his newsletter. However, he left enough clues in his presentation to figure them out. And I reveal them here for free. Just drop a like and subscribe if you appreciate me doing this. Also, everything in this video is protected under fair use laws. I'm not disclosing any proprietary or paid information in this video. I am simply analyzing free and publicly available sales presentations and using the clues in these presentations to infer the stock. These sales presentations are not intended for paying customers and are freely distributed via email. There's a lot of stocks to uncover, so we're just going to jump into things. The theme of this presentation is Trump is going to be a boon for AI and certain stocks will explode. Here's what Altucher says about the first company he's pitching. There's another AI stock that could be even more explosive. It's a company that I predict will play a key role in some of the biggest AI applications, including robotics, self-driving cars, drug discovery, and other applications similar to ChatGPT. A famous hedge fund manager is projecting that by 2029, this company will be worth more than 2 NVIDIAs. Think about that. NVIDIA is the world's largest company. But this famous investor is predicting this company I'm recommending today could be worth more than 2 NVIDIAs. If that happens, we're looking at a gain of 704% by 2029. Altucher goes on to say, some other legendary investors on Wall Street are all over this company. I'm talking about firms like Renaissance Technologies, which is the best performing hedge fund in history. Had you invested $100 in this fund in 1988, it would have grown to more than $2.1 million by 2018. That's 200 times better than Warren Buffett, who's considered by many the best investor ever. In other words, this fund is the real deal. And they have invested $405 million in this company I'm recommending. Or look at Larry Ellison. He's the founder of tech giant Oracle and the world's 3rd richest man, only behind Elon Musk and Jeff Bezos. And he has invested billions in it. And finally, Altucher says, BlackRock has invested even more in this AI player, a whopping $37 billion. Based on these clues, I'm pretty sure the stock being pitched here is Tesla, ticker TSLA. The reason I think it's Tesla is Larry Ellison has invested billions into Tesla. Renaissance has more than $400 million into Tesla, and BlackRock is a major investor as well. Also, Altucher said the company would be worth 2 NVIDIAs in 2029, which would represent a 700% gain for the company. If Tesla were to gain around 700%, it would be worth roughly 2 NVIDIAs. So I'm certain this is the stock. Here's what to know about investing in Tesla, and after I'll tell you if I'd buy. First is EV king or dethroned, dominance versus rising competition. Tesla leads the EV market with approximately 50% US share, but rivals like BYD, Ford, and legacy automakers are flooding the space with cheaper models. Can innovation keep them ahead? Second is Elon Musk. Visionary genius or unpredictable liability. Musk's ambition drives Tesla's moonshot goals. AI, robots, autonomy. But his polarizing antics and divided focus, SpaceX, risk spooking investors and regulators. Third is profit margins, slashing prices to stay on top. Tesla's industry-leading margins, 17% plus in 2023, are shrinking as it cuts prices to boost demand. Will volume outweigh the profit squeeze? Fourth is autonomy ambitions, the self-driving dream. Tesla's pursuit of full self-driving technology could be a game changer, but regulatory hurdles and the need for flawless execution pose risks. The promise here is huge, but so are the uncertainties. Fifth is energy storage and solar could be bigger than cars. Tesla's energy division, Megapack Solar, grew 54% year over year. This high-margin underrated segment might fuel its next growth phase. Sixth is global headaches, factories, tariffs, and political firestorms. Gigafactories in Berlin and Texas face protests, labor disputes, and geopolitical risks. Expansion isn't always smooth sailing. Seventh is battery supply chain, the silent time bomb. Lithium shortages and reliance on China for materials could throttle production. Tesla's gigafactories aim to fix this, but it's a race. Eighth is stock price. Paying $600 billion for hype or real growth. Tesla trades at 60 times earnings, versus Toyota's 10x. Investors are pricing in perfection. Any stumble could crash the premium. Ninth is regulatory credits, a $1.7 billion cash cow for now. Tesla earns billions selling emissions credits to polluting automakers. But as rivals go electric, this revenue could vanish by 2025. I personally think Tesla is a buy because of Musk's close ties to the current government. I don't think Musk would have taken the risks he's taken to support Trump unless he thought he could use it to his own benefit. I know the valuation is sky high, but I agree with Altucher that Tesla has the potential to be the biggest company in the world. It's not guaranteed, and there's always the possibility of a huge falling out with Trump, but Musk seems to constantly pull off the impossible. I'm going to reveal my guesses for the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Here's what Altucher says about the second company. It's a company that could help President Trump execute on his promise to make the US government more efficient. And Altucher says, an AI can help Trump accomplish that, because it can analyze data and help identify wasteful spending. In fact, this company I'm recommending is already providing this kind of service to several federal agencies. And there's more. Aside from increasing efficiency, this little-known AI data analytics company could help Trump protect our national security interests. Also, Altucher says this company already has a contract that guarantees it will work with the U.S. Department of State during Trump's second term. And finally, Altucher claims the stock for this company went up 200% during Trump's first term. I'm fairly certain the company Altucher is calling the next Palantir is Tyler Technologies, ticker TYL. Tyler Technologies is a data company with extensive government contracts and recently got a 5-year contract with the State Department, which Altucher said this company did. Additionally, the stock for Tyler Technologies did go up 200% during Trump's first administration, going from 150 to around 450. So I'm pretty sure this is the stock Altucher is recommending. Here's what you need to know about TYL, and after I'll tell you if I'm a buyer. First is the cloud-first strategy, riding the SaaS wave. Tyler Technologies has been aggressively shifting towards cloud-based software as a service SaaS offerings. This move is paying off with over 95% of new business coming from SaaS, which could mean more stable recurring revenue streams. Second is strong government ties, a moat in public sector software. With a focus on government clients, Tyler has built a significant moat in the public sector software market. This niche provides a stable customer base and opportunities for cross-selling as government entities often require integrated solutions across departments. Third is financial health, revenue growth and margins. The company has shown impressive financial performance, with an 8.04% revenue growth over the last 12 months and a gross profit margin of 43.89%. This indicates a healthy business model with potential for profitability expansion. Fourth is acquisition strategy, expanding through buyouts. Tyler's acquisition of NIC in 2021 for $2.3 billion stands out. This and other acquisitions like VendEngine and ReadySub have been part of a strategy to broaden their service offerings, though integration challenges could arise. Fifth is the AWS partnership, leveraging cloud giants. Partnering with Amazon Web Services, AWS, is a strategic move to enhance their cloud capabilities. The planned closure of the Dallas data center by the end of 2025 shows commitment to this strategy, potentially reducing cost in the long run, but might increase short-term expenses. Sixth is stock valuation, high PE ratio, buyer beware. The stock trades at a high PE ratio relative to its near-term earnings growth, suggesting it might be overvalued compared to peers. This could mean less room for price appreciation unless growth accelerates beyond expectations. Seventh, market competition, not without rivals. While Tyler has a strong position, it's not without competition. Competitors like Oracle, Microsoft, and emerging cloud-native companies could challenge Tyler's market share, particularly in areas like CAD RMS, where differentiation is less pronounced. Eighth is long-term vision 2030. Promising future. Tyler's leadership has set ambitious targets for 2030, including 10 to 12% annual revenue growth and $1 billion in free cash flow. If they achieve these goals, there could be significant upside for long-term investors. I think TYL is a good company, and there's a chance it could outpace the gains of the market over the next few years. But in this case, the valuation is a little too rich for me. I can see holding the stock if you already have it, but I'd wait for a better price before entering. Here's what Altucher claims about the last company. But first, I want to tell you about another AI opportunity that I believe Trump is about to send skyrocketing higher. You see, when it comes to AI, most people are focusing on companies like Nvidia, Microsoft, Meta, Google, and Amazon. But there's an overlooked segment of this AI boom that's already producing unbelievable gains. You see, AI requires a tremendous amount of energy. That's why companies that are supplying energy to all the AI data centers are exploding higher. While many stock pickers recommend nuclear stocks these days, Altucher claims natural gas will play a bigger role. Altucher shares this image of the natural gas pipelines this company operates, and this picture allowed me to figure out the stock. After doing a reverse image lookup, I found this exact picture on Kinder Morgan's website. So the stock being pitched here is Kinder Morgan, and the ticker is KMI. Here's everything you need to know about this stock, and I'll tell you if I'd buy after. First is dividend darling or dividend danger. Kinder Morgan is famous for its high dividend yield, over 6% as of 2023, but it slashed its dividend by 75% in 2016. Today, the payout looks safer due to stable cash flows, but investors should watch debt levels and energy demand trends closely. Second is the pipeline empire. Built to last, KMI owns 83,000 plus miles of pipelines and 144 terminals. This infrastructure is critical for moving oil gas, but it's a double-edged sword. Regulated assets provide steady income, but aging systems risk maintenance costs or public backlash. Third is fee-based cash flow fortress. 90% of KMI's cash flow comes from fee-based contracts, not commodity prices. This shields it from oil price swings, but long-term contracts could face renegotiation risks if energy markets shift dramatically. Fourth is massive amounts of debt. KMI carries approximately $30 billion in debt. While management has reduced leverage, rising interest rates could pressure its balance sheet and limit growth investments or dividends. Fifth is regulatory roulette. Pipeline projects face intense regulatory political scrutiny like the canceled Keystone XL. KMI's growth depends on approvals for new projects which are increasingly risky in a climate-conscious era. Sixth is tax trap for the unprepared. KMI is structured as a C Corp, not an MLP, so dividends are taxed as qualified income, a plus. But prior tax complexities from its MLP days still haunt some investors' memories. Seventh is insiders are all in. Founder Rich Kinder owns $2 billion in KMI stock, a strong alignment with shareholders. I think natural gas pipelines are a good bet for Trump's administration, and I think Kinder Morgan is a buy. Although I personally like Energy Transfer, ticker ET, a little more. The valuation for ET is better than Kinder Morgan, and ET has a better dividend at the moment as well, but I think either investment will be good. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.